Good morning, everyone. Today is Monday, May the 6th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are in a full-on rally mode. Very interesting, but let's take a look at the levels in play. I do not believe they have changed in general. What we are looking at is across the board on these longer-term time frames, we are looking at upward sloping moving averages. That tells us the pullbacks are buy zones. Across the board, momentum is up, but waning a bit, telling us that we should wait a bit for that pullback. And so let's take an expanded look at what the volatility bands are telling us one at a time. So for the ES, we've got these numbers between 51.8850, 51.92, 52.08, and my suspicion is that we probably won't get to 52.72, but that's the next big line in the sand, right? If we take a look at our daily chart, we can see from the monthly formation, first of all, we just started a new month. From monthly formation, we had this deep dip, wiped out all the gains, and now we are running up this particular range, right? So my thought is 51.88 all the way to 52.08, maybe even 52.11, 52.15. Those are the numbers that I am suspecting we have as, ranges for us to look at. But you can see we're walking up this formation right here where we have the ranges in play. On the downside, if we happen to sell this bounce to the upside, how are we going to know? We get to 51.88, it begins to stall out, momentum continues to be negative, and we break down and stop heading higher. Well, you can see the volatility bands there. On the way down, 51.67, probably where the VWAP will be by the morning, and then 51.51, which was an old call wall. Maybe really the number that we get is a little bit higher than that. Where did I clone that one? I'm just going to borrow this. And here is our range event at that 51.57. We should remember the noise from there last week, okay? So that's my thought. I don't see us rolling over, though there are all kinds of crazy things going on in the market geopolitically right now. We're just going to ignore them because the charts are ignoring them, and that's what we have to do because we only get paid for that. We don't get paid to study geopolitical things. That's not where our wheelhouse sits. All right, now let's take a look for the NQ. On the dailies, we can see, let's take a peek very quickly. We can see that this is the current range. These are our bars that we're looking at. If we get from here, then we'll walk up this particular wall of worry that has a number of important levels to watch that are fairly close to each other, maybe about 50 points apart. But that's what the NQ is trying to do. It's trying to break through this old resistance. On a daily, it's just turned positive, like most of the momentum indicators that we will look at. From the 2-hour perspective, we can see that there's choking a little bit. Here is the third volatility band, 3 standard deviations away from the VWAP. We're moving higher, but away from the band. And so that's telling us, listen, if it bounces, there's a likelihood that it finds a collapse zone, maybe a little bit above this 72, maybe closer to 18,100, right? We'll take a peek at that later. On the downside, we have the clean region that we held pre-market and literally most of the day on Friday. That's going to be somewhere around the 986 area, maybe 988, something like that. You want to be careful looking for the pullbacks to have buy zones. This volatility band is quite a bit more sideways than the ES volatility band that are really starting to expand. All right, let's take a look at SPY. From a daily perspective, we can see that SPY is holding nicely up into the band here. Now, here are my ranges that I looked at. The ranges have sizes that are different, right? This one's very sloppy. You can tell that people are participating with a lot of different ideas. And my suspicion is still somewhere between 514 and 516 as the top end right there. On the bottom, we're looking at 511 to 508 potentially. Yeah, and that's wow, that's so messy. A line doesn't even belong there. All right, so we'll look 516 to 517. But listen, this is very bullish. All of the charts are beginning to show positive momentum. So the pullbacks stay buy zones in this kind of space. If we come into 511 and hold it, more bullish action. If we come into 508 and hold it, they're going to try and recover from that bullish action. The lines, 511 looks good. Friday's VWAP is just under here, but that 511.50 looks like a key space that the traders are coming in to buy. It could sit a fair bit sideways in the grand scheme of things until, it breaks out of a formation. Remember, one of the best things that you can do for yourself is look at the first 30 minutes or so of price action and see where the traders are stabilizing, and then get yourself involved, all right? And that's really going to be how we have to play today. I don't have a feel for the market. I am here back in Southwest Florida for a few weeks, actually a couple of weeks, and then I'll be back down in the Carolinas with my mom as we work through the details there. Coming up, look at this, broken right out of its cycle. This is the YM. It's broken out of its range. Old support, resistance, didn't even get there, resistance, and now breaking through. This was a buy zone trigger at 38,894, and that is looking like it wants to head up to 39,224. Okay, so this is, again, particularly bullish. Traders are buying the dip. Somebody believes something. I don't know if the shorts are caught flat-footed, whatever it is. It's a buy the dip in this formation. Here's the rub. If, as we're going, breaking higher high away from the band, losing momentum, you wait for the dip or you take the quick snap short that sends you back into the range. All right, if we want to double up what that range might be on the downside, early morning supports look like they're around 38,847. Prior resistance from the days, maybe Friday into and Sunday night formations, 38,912. And then, 39,000 is going to be a nice round number that they try to chop into and might fade. If momentum continues to fade and we continue to move higher highs, get higher highs away from the band, it's telling us that we're going to have a mean reversion event. Momentum clearly to the upside, so pullbacks most definitely buy zones. So let's take a look at the Qs next. Qs, from a daily perspective, the Qs price action is also bullish. Broke out of the base here into the close on Friday, now up into this heavy congestion. 437 resistance could be the problem there. 437 resistance. If not, we head right back to 440, right? I expected a lot more choppy motion than this, I'll tell you. This is a surprising move to me, but there are a lot of very active traders in reading buy zone formations, and they're thinking, hey, I'm going to buy this dip. So far, the pre-market action is really quite stagnant to me. Volatility bands are tight. We're looking at areas that don't really feel particularly lovely in my mind. Okay, sideways action, 437 up into 440. Below, we're still looking at 434 to 435 and then 433. All right, let's take a quick look at gold. Let's see if it's moved to the current contract. It has not. Always in rotation here to look at GC2. Really bouncing off this 4,300. Now, my suspicion is that we would kiss 4,200, but we kiss 4,300 off to the races again. Could be another round of central bank buying, but you can see we're halfway here. Pullbacks are buy zones. Solid momentum. So this is a strong, solid momentum chart moving up very, very nicely and looking like any pullbacks into 2320 are going to be a buy zone event. As for oil, here's what we're staring down. Momentum is positive on the tight time frame, probably a little negative on the broad time frame. I suspect we're still heading to the south. This is my next target, 75 to 76, but we're bouncing in this heavy sideways chain. So we could go up to 79.30, 79.90, and then collapse again. I'm looking for the bounces to sell. Momentum is very negative. Trend is very negative, but I am far away from this moving average. And notice, when we get far away from the moving average here in oil, and this moving average is the 14 exponential, it has a tendency to want to revert to the mean. So in this case today, as soon as we get up above the heavy congestion, probably around 79.11 or so, I think this one takes off and it reverts to the mean back up into this other channel that I'm seeing. All right, everyone, that's it for me. Take care, and I'll see you on the streams. For those of us, remember, you'll see me on Zoom. If you're on the Benzinga Pro platform, we'll work through all of this, options, positions, and going through technical analysis, how we can trade these candlesticks better. See you there.